science in the beginning of the 2000s had a higher percentage of females, and it's gone down since. Part of that is because we had an implosion of the IT sector in the mid-2000s. Kind of soured the expectation of the development.
Oh, thank you very much. So as you can see, I'm loaded up with microphones, 2 of them on me, so we'll see whether I say the same thing on both of them. As economists tend to speak out of both sides of their mouth, so we may get 2 different recordings out of this. So I'm going to talk to you about an experience that for me started last spring, but it kind of forced me to question a lot of what I've been working on in public policy space for the last 40 years, so it proved to be an interesting journey. Hopefully you'll think so as well. It all started a call I got from the Secretariat for the Council of the Federation. Council of Federation, of course, being the group of the 10 provincial and 3 territorial premiers. And they asked me if I would do a contract in preparation for their June meeting of all the premiers, the question being, will our economic and revenue growth rates in the provinces and territories be sufficiently robust to continue to fund public services? Of course, a pretty open-ended question. They narrowed the interpretation somewhat because they interpreted funding public services as keeping public services flat in real per capita terms. So what does that mean? Well, the population in Canada is growing about 1%, and if we assume the inflation rate continues around 2%, that would mean that public spending would increase at about 3%. Will we have the revenue to growth to fund 3%? So I probably foolishly agreed to do this, probably particularly foolishly because they only gave me 7 weeks to do it. And for 2.5 of those weeks, I was teaching every single day at Queen's. So I was kind of had my hands full, but I got a few research assistants to help me, and we took this on. First of all, I rejected the form of the question as I usually do in that thing because I think the question was ridiculous. If you look back since 1867, there's been no sustained period where provincial and territory spending has been flat in real per capita terms. So I don't know, why would you ask a question into the future that has never occurred in the past? Almost all the time, provincial spending has increased faster than population and inflation together, and on occasions, like the second half of the 1990s, and most recently, it's been slower than that, but it's never gone along as that trend line. So in addition to looking at the questions they posed at it, we also looked at some scenarios that I thought were more realistic. To give you the bottom line is I think all the provinces are in trouble fiscally because their economic growth simply is not going to be fast enough, and of course the element that's going to put them into trouble is healthcare. They probably can fund parks and even education, particularly given the demographics going the other way and giving them a bit of a break in some of these other areas, but healthcare is just simply, I think, going to grow too fast to be supported in that. So that invoked the second part of the contract, which is what I'm going to talk about to a fair degree. What can we do about it? How can we raise our growth rates? And I thought that was interesting because typically when you read in Canada or you read advice from the International Monetary Fund or the Organization of Economic Cooperation, they pretend like the federal government is the only entity that has economic instruments in Canada. And they don't realize that collectively, if you look at the revenue and the spending power of the provinces collectively, it's pretty much the same size as the federal government. They have a lot of instruments and a lot of instruments independent of the federal government. What could they do to increase there? So I know economics can be a little bit dismal, so I'm going to start off with some mathematics to lighten it up. How would you answer such a question? Well, of course, you have to build a projection of what their growth rate is likely going to be. When I do these things, I tend to like to look, what's everybody else do? And then I tried to have the perspective, what's wrong with what everybody does? And my conclusion was everybody else's projections are wrong. I can't prove it. We'll have to come back in 20 years to see whether I'm right, but I think I'll be right. I also decided in the forecasting, this is always forecast 20 years out, because if you're wrong, it takes 20 years before anybody finds out. If you're stupid enough to forecast next year, somebody always gets you really quickly. I think I got a pretty good view out there 20 years. So what was interesting is the Conference Board had done a contract a year ago, basically being asked that same question, and they had assumed an average growth rate for Canada of 2.2%. And they said with 2.2% real growth, we're going to be okay fiscally. I thought that was really kind of interesting because before I did all the background number crunching, 2.2 sounded like a pretty high number for me. So I was looking at some of their assumptions, and we can measure productivity in different ways. They were looking at it as multi-factor productivity. So how much output do you get from the combination of capital and labor? So depending on who measures and how you measured it, multi-factor productivity growth in Canada since 2000 has either been absolutely zero or it's been slightly negative. And they assume plus 0.6%. And if you look back at the Canadian record, we have not had in Canada multi-factor productivity growth anywhere near 0.6% since 1973. So it struck me a little bit odd. Why would you base such an important question on an economic result that hasn't been visited in Canada for over 40 years? I would hope we would have that kind of result, but why would you count that? Labor force productivity in Canada, output per hour worked in Canada has averaged 1% since 2000. That struck me as a more reasonable base to base it, and multi-factor productivity, as I said, has been 0 or slightly negative. 2000 to 2014 is a nice time period. It's 15 years. 2000 was kind of a nice even point in the economic cycle. So was 2014. So you're not starting at one end of a cycle and picking up at the other end of the cycle. So that kind of locked in the assumption of what we would do for productivity. So output per hour worked of 1%. And then we looked at all these other forecasts that everyone's doing, where it was the banks, the Parliamentary Budget Office, the Conference Board of Canada. They simply looked at, if we look at the labor force participation rates for the various different age groups, and we extrapolate into the future, we get about a 1% growth in Canada's labor force, most of them about 0.9. But they missed in a critical detail. The number of hours worked by Canadians has been coming down quite strongly for the last 30 years. The rate of decline has slowed a little bit, as particularly older workers, particularly men, have increased their hours somewhat in the last couple of years, but the downward trend is quite pronounced. So two things happen when the labor force gets into that 55 to 60, 60 to 65. They're first less inclined to participate at all, but when they do participate, they tend to work fewer hours, much more part-time during the week, part-time during the year. No one else had really looked at that. So I assumed that the downward decline in hours would continue, but at a slower pace, somewhat like it has in recent years. And so instead of getting a growth contribution from the labor force of 0.9%, that only gives you 0.5. So the math's pretty simple with that. If your labor force is growing at 1% and your contribution with the hours worked is only 0.5 and the productivity growth is only 1, your average sustainable growth rate going forward is only 1.5%. The difference between 1.5% and 2.2, like the Conference Board did, or other external groups that tended to focus, if you look at the Bank of Canada, their growth rates tend to be that 2 to 2.5%. Might not seem that big, but of course over a 10 or 20 year period, that's absolutely huge. It accumulates to a huge number. If you assume we stay in the rate of a 2% rate of inflation, 1.5% real growth, it gives you 3.5% nominal income growth in the economy. It tends in all the provinces and territories, if you don't change tax rates, your revenues tend to follow nominal income growth in the economy. So if the economy is growing around 3.5, revenues grow at 3.5. So if that's the case, and taking that an average, the simple answer to the Premier's question was, you're okay. If you want to hold public spending to a 3% growth track, you should be okay on average across the provinces. You got revenue growth at 3.5. But of course, we got 10 provinces and 3 territories. They're all in very different situations. So, and I said the average real growth rate for a Canadian economy would be 1.5%. At the low end of that would be a province like New Brunswick, where applying that same type of methodology would be only 0.5, 0.5%. Because A, they don't get much immigration, and B, they're quite a bit older, so they have a much larger portion of their population moving in it. And of course, if you look at the expenditure side, you get a double whammy because, of course, being an older population, they're going to get hit with a much higher and growing health bill as well. Ontario, not too surprising given it's 40% of Canada, is somewhat close to the average, 1.4 instead of 1.5. The western provinces, being attractive of late to immigrants and being a younger population, tend to have a little bit higher growth rate. But on average, if that's the question, then you seem to be okay. But if we look back at what I would think a normal growth rate of healthcare, which would be something in about the 6% range, how do I get that? Well, we got that 1% population growth. At the moment, we got another 1 percentage point from aging of the population. I'll use that in the simple calculation, but I think that number will go up. I think as we get hit with the combination of the aging and some of the chronic maladies, dementia, probably some new interventions that will help people later in their life, which will be a good thing and improve the quality of education, the quality of life, but I think that that will increase that aging component. But let's just say conservatively 1%, so you got 2% from demographics. Add in the 2% rate of inflation, and inflation in the healthcare sector almost always runs a full percentage point above the general rate of inflation. because healthcare is almost all labor costs, and you don't tend to have the productivity offset to those labor costs. So that gives you 3%. So demographics from inflation, you're up to 5. Other than brief periods of austerity, there's always an increase in the intensity with which we use healthcare. And that's a completely natural and a positive thing. Healthcare has never been anything other than the number one thing for interests and concerns of the population. If there are breakthroughs in healthcare that will allow people to have a higher quality of health and therefore a higher quality of life, they would want that, and why would anyone want to deny that? So as we say, it would be a positive good. As incomes grow, you would naturally expect people to consume more of healthcare. That has tended to be about 1.5% per year historically. So even if I assume 1%, you put that demographic, the inflation plus the increase in intensity, you're at 6% growth in healthcare. If it's 2%, it's 7%, which is probably not an unrealistic assumption. Some will say, and on October 29th, I think it is, the Canadian Institute for Health Information will release their estimates of 2015 healthcare spending. And we'll show in 2015, all spending in healthcare in Canada increased by 1.6%. My apologies to CIHI have revealed their secret data so far ahead of their release, but that continues, actually a fairly persistent pattern we've had in Canada since 2011. And you could say from that, hey, don't worry about the 6 or 7, we've kind of beaten it, we've turned down the trend increase in health. And I would say if you want to think that way, look back to the 1990s, because we had exactly the same pattern in the mid-1990s to the late 1990s. And if history repeats itself, first the roof will be blown off for a couple of years, and then we'll go back to a fast track, because that's exactly what happened in the beginning of the 2000s. In almost all provinces, we had 2 years of very fast healthcare spending growth, and then we went to a strong trend. So whether you look at my naive calculation of a trend increase in healthcare spending, 6 or 7%, or do what I did in productivity and just assume the average growth rate from 2000 to 2014, which by the way is 5.8%, so not very different from my status quo calculation, you get a very different answer to that question from the premiers. Then almost all provinces are in trouble. And just think of healthcare to grow at 6% and you want to keep your total spending at 3%. Healthcare is almost 50% of all spending of provinces and territories. By definition, that means everything else that the provinces and territories are responsible for has to be flat. And that's flat in nominal terms. So that means in real per capita terms, everything else has to go down by 3%. And I think it would be totally unrealistic to imagine a 10 or a 20-year period that some party could govern the people of any province or territory when they're driving down every element of spending but one by 3% in a real per capita terms. That's not even a game opener to think about those terms. So they got a problem. Now, they didn't ask us what to do on the spending side. The obvious thing is you've got to do something to turn down that healthcare cost increases. It can't go on at 6% or 7% a year. I think it's very unrealistic to think it would go up by less than 5%, given the age of the population, given the possibilities the governments and healthcare workers could offer to people in terms of a higher quality of life. I don't think it's conceivable that it will grow much less than 5% on a sustained basis, but you have to at least secure that. You have to be very parsimony on the rest, but you still got a problem. You still just don't have enough growth in the economy. Can you get out of that by raising taxes? Well, we have to distinguish here, back to the math, we've got a difference between growth rates and levels. You've got a growth rate problem, you don't have a levels problem. If you wanted to get out of that box by raising tax rates, you'd have to raise taxes each and every year. That wouldn't be a province raising their HST rate 1% one particular time. That would be raising it 1 percentage point every single year. I don't think that's politically feasible. And of course, higher taxes have an economic cost. So at some point, the tax burden becomes so high, it would spin back and weaken your economy. And I think you would get very little additional revenue. So I don't think we could think about the tax side, the tax rate side getting you out of this box. So it comes back to the question, what can you do to raise the growth rate? And this is where it really, to me, sort of brought together all the thinking I've been involved with economic policy for really 30 or 40 years. So in Canada, since roughly 1984, when the Conservative government came in and wrote a document called the Agenda for Economic Renewal, Canada has been more or less following what I would call an OECD paradigm. It's basically, if you establish a level competitive playing field, growth and productivity will come. and you establish low and stable inflation, you have moderate public debt burdens, you establish a competitive tax regime, particularly a fairly low rate of taxation on capital, because that's mobile and you want to make sure capital stays in your country. You establish free trade, you minimize the degree of regulation, you don't have impediments like inefficient employment insurance programs, you have reasonable competition laws and the like. And this is a whole body of research, a whole set of advice that's been given by organizations like the OECD or the IMF, basically since about the mid-1980s. And Canada has more or less adopted this. I would say relatively unscientifically, we have embarked and implemented about 70% of that market-based agenda. So we have some remaining flaws. We have interprovincial trade barriers, which has to be, let's face it, as stupid as you could possibly be. The whole thrust has been establishing free trade outside of Canada. We don't have anything remotely related to an economic union within Canada. And we were just talking about earlier today, if you want to teach in Canada, you have to be certified by that particular province. Some have equivalent of a passport system, most others don't. You have to take a different exam. You want to be an electrician, well, you can be an electrician here, but you can't be an electrician there. Of course, we don't have portability in healthcare, even though it's written in the Canada Health Act, and on the list goes. We have all kinds of preferential rules about government procurement. That doesn't make any sense. We've got a stupid corporate income tax system where we give a lower tax rate to small companies. Why we want to reward and encourage companies to remain small is beyond me. Large companies hire more people, they pay more wages, they do more research and development, they're more likely to be involved in exports, but we encourage them to stay small. Some of the political parties saw it was such a genius, they ran on a platform of lowering the small business tax rate and making even more distortions in the tax system. Hopefully that's not going to come about. But so we have some remaining difficulties in that, but I would say we did about 70% of it. And so then, if you look at back, and sorry to keep picking on the conference board, but if you look at what they did in the previous year, they basically, their advice to the premiers was complete that agenda. And I would agree with that. But at some point, and I think we're at that point, you got to stand back, and what has that agenda delivered for us? Has growth been strong since we've been following the market-based agenda? No, it has not. If we measure it from productivity growth rate, our productivity has been one of the worst of the developed countries. So if we look back to 1960, when the Organization for Economic Cooperation started as the 24th wealthiest country, Canada had the 3rd highest level of productivity. We're now 17th out of the original 24. Only 3 countries since 1980 have had a worse productivity growth rate. So not only are we doing bad relative to our own history, we've been doing badly relative to everybody else. Have Canadians in general benefited from the relatively moderate growth we've had? Absolutely not. The growth has not been inclusive whatsoever. One of the axioms that used to be well known in economics was that when you have productivity growth, it flows into higher real wages. That was always the selling point, why you want higher productivity. The productivity has not flowed into the wages you and I or anybody else around here gains. All the gains have gone to the top 10%, almost all of them to 1%. They've all gone to the capital side, and the capital side as individuals all comes back to executives and shareholders and dividend receivers of the corporations. This election campaign, again, was interesting. The inordinate focus on the middle class and how the middle class has been stagnant. The bottom 40% of the income distribution has been falling. I would think that would be a more pressing problem. The bottom 20% has been falling hugely, a decline of about 20% in their real incomes over the last 15 years. So that growth, you can look at the statistics and look at the average growth rate, but it hasn't benefited all that many Canadians. You would want to think that the growth has been environmentally sustainable, and it's been anything but. There's been no attention to that, no emphasis. This is not a political statement against the Conservatives. The Liberal governments put out all their Kyoto targets and never introduced anything remotely close that was ever going to deliver about it. That was never a consideration. So I have to think about, this hasn't worked all that well. If it hasn't worked all that well, why would your singular recommendation be to complete that agenda? I think that still makes sense. I look at it, it does seem a good idea to have low and stable inflation. It's hard to argue why you wouldn't want to have relatively modest debt burdens so you're not making the economy inefficient, adding to borrowing costs, passing on to future generations. It's hard to argue against having solid competition. These all seem like good ideas, but they seem to be maybe necessary but not sufficient conditions. Maybe it's time to look at some other things. And this is what led me to look at some parts of the agenda. And there, I was really quite intrigued and very much looking forward to a new OECD. It's sort of my the group I like to kick around a little bit. I like to tease them a little bit. So it was in 2010. Every year there's a delegation for the OECD. It comes to background study in preparation for preparing the OECD survey. And I was joking with the head of the delegation, who happens to be a PhD in economics from Queen's University, so he knows the scene pretty well here. I said, you must really want to kick Canada out of the OECD because we make you guys look really bad. Because you go around the world and you would like to say, here's this country, Canada, that implemented what we recommend and they're doing phenomenally well, except for we're not. And we must be kind of an embarrassment to you. And he said, if you think Canada's an embarrassment, imagine how we feel about New Zealand. New Zealand adopted the OECD recommendations earlier than we did and went even further, and their economy has been going nowhere for the last 2 decades. So this is not just a phenomenon in Canada, that maybe this kind of market-based OECD paradigm may still be necessary but doesn't seem sufficient. So you start looking at some of the components of this, and you look at things like, well, if you look at the difference in productivity in Canada and the United States, one of the things that really stands out is Canada's underinvestment in machine equipment. So on average, per hour worked in Canada, we get about 55% the stock of machinery equipment, and the biggest culprit is computer software. It's not like Canadian companies can't access computer software. They can buy the same computer software as anywhere else in the world. It's readily available. Pretty easy to find out what it does for you. You wouldn't think there'd be an information problem. We ran a substantial period of time, well, all the stuff is imported, of course, so you have a dollar factor, but we ran a substantial period of time when the dollar was worth more here than in the United States. We had a period from 2003 to 2007 of unprecedented retained earnings of corporations. They had the financial wherewithal to bulk up machinery equipment. The dollar was appreciating 6% a year. They did basically nothing. Real investment looks like it increased over that time, but all that happened was the prices were declining from the appreciation of the Canadian dollar, and they kept their nominal investments flat. And then you think, but wait a second. They said that their obstacle to investing was we had an uncompetitive tax regime in Canada. And the governments of Canada, federal and provincial, gave them a competitive tax regime. In fact, a way better tax regime than our competitors have in the United States. And if we look at the average rate of taxation on capital in Canada, it's about at the OECD average, and again, lower than the United States. So if you look at that as civil servant, I guess you can have 2 reactions. Your typical one is, we did what you would expect us to do. We were asked to deliver a competitive tax regime, and we did. Businesses are stupid, they're uncompetitive. What can we do about that? Nothing. Let's go on to something else. But then at some point, you come back to a second option. Well, maybe you do need to do something about that because the problem's still there. Why aren't we doing more about it? And you can look at the same parallel thing. We've been establishing free trade agreements, and yet only 4% of all the revenues in small and medium-sized enterprises in Canada comes from exporting to emerging economies. So it's there in paper, but it's not there in practice. But then you look at some of the trade agreements, and all the trade agreements, because the multilateral efforts have failed in Canada and around the world for the last couple of decades, they're all bilateral or regional. And they come with horrifically complicated rules, source of origin being the number one. We got a free trade zone in Shanghai. Great, Canadian companies, go for it. By the way, there can't be anything in what you pass through Shanghai that doesn't come from the 16 countries that are listed in that free trade agreement. Sorry, you're wanting to put in some car parts through Shanghai, but they've got some input from one of the country that's not in that 16 list. They can't go through on the free trade. How do you figure it all out? That's complicated. Am I going to do that when I'm a 400,000 net revenue company per year? Oh, hugely complicated regularly. You want to set up a financial institution in India and China? Why not? They're the fast growing country. Hey, first of all, you got a representative office for 10 years. You got a horrifically complicated arrangements to get into that stuff. Can you as a small business break through it? So again, you start to get this picture. Maybe it's a necessary, but not a sufficient condition. We've got endless institutions and federal and provincial governments that are helping people getting trained and helping get jobs. But what do? Well, we don't really know. We have 12 of them in our Ontario government. None of them keep a record of whether the people they train or they educate get a job. None of them look at what they're getting paid. None of them look at whether they're keeping their job or not. One of our big problems we have is the lack of success of economically integrating immigrants. And we get, on paper, highly valued immigrants, highly educated, higher educated than the Canadian born, They earn 75% of the Canadians. If you're a male immigrant with a bachelor's degree, you earn 55% of a Canadian born with a bachelor's. If you're a woman with a bachelor's degree, immigrant, 45% of the Canadian. Number one obstacle, they always say, both immigrants and employers, is difficulty with education. We've got all kinds of education programs. We had one at the federal government, $400 million in 2007. I called them in 2009. What are the results of the program? Well, it was a success. We spent the $400 million. That was the only thing they measured. They did not give a linguistic test before the training. They did not give one after it, and they did not keep attendance of the people. They gave the money to the institutions that were giving the training, and there was no accountability back for it. So there's a need, and there we had a policy. Actually, it was directly targeted towards that, but we have no idea. I suspect it probably didn't work, but we would have no idea. So it kind of led me to a thought which I think is kind of dangerous, but I think it's one that needs to be fleshed out maybe more. Maybe there isn't this dichotomy in public policy between this hands-off, market-based OECD paradigm on one side, build it and they will come, and this heavily intrusive and sort of image that we've had from public policy in the past. And there's all kinds of examples. I mean, it's hard to imagine any government program that hasn't had the end result that just distorted a market and mucked up everything. Usually there's no clear economic or market failure which they intervene, and all they did is give a competitive advantage to somebody else and waste a lot of resources. So there's a lot of downside, but maybe it's not one or the other. Maybe we have to figure out how the two go together. We do need to have the sound economic principles, the market-based approaches, but maybe you need, I don't know if activist is the right word, or a more proactive view. So you can't just naively think I'm going to sign a free trade agreement and we're going to reap the benefits of that, because the companies don't seem in a position of doing that. You can't just establish a competitive corporate tax field and think investment's going to come, because we've been working at this competitive tax field since 2000 and investment has responded. So Deloitte did a survey a couple of years ago, and it showed that 36% of Canadian businesses do not know they're underinvesting relative to their competitors. And again, you know, I carry the baggage 23 years as a federal servant. I look at that and my reaction is, how can they be so stupid? How is that possible? How can they not know what their competitor is doing? But what good does that thought do you? It doesn't get investment going. It doesn't inform your policy around them. Maybe they need the information. And it's kind of naive. It almost sets you up for a stereotypical joke that some civil servant who's never been out of his office, is he actually able to give some meaningful advice to somebody? I would say one of the things that surprised me when I did the Ontario Commissions, the only program I heard positive things about was a mentoring program for fast-growing small businesses. And I really was quite shocked by that, because it was. These people have spent their entire life building their firms, investing everything they got in the firm, saying they were getting valuable information and assistance from these bureaucrats who have never made a cent in their life. And by the way, if you want to know how that works, look at Canadian Business Magazine, August 2014, and you'll see there, I am named as the 20th most powerful business leader in Canada. I have never made a cent for any business in my entire life. This, in a nutshell, tells you what is wrong with Canadian business. I did sell some sporting goods from Sears when I was in high school, and apparently that's enough to get you into the top. So it just kind of shows you there are some problems, and maybe you can be a business leader from the government side. Maybe we can do a lot better in terms of these training programs. But boy, you've got to be really careful. But I think it's really intriguing, the sort of nexus. And of course, when I was thinking about this and the need to go in a different direction, I wasn't contemplating we're going to have a new government that's got a majority that actually maybe could do something about this and could actually engage what competency there is left in the bureaucracies. I don't know whether they successfully do that. It would need an incredible amount of discipline. I think a document I think is going to have more profound, if it was adhered to, it would have a more profound effect than anything else, was a study done by a former colleague of mine at the Department of Finance. And he looked at what the actual cost of government intervention programs is. So what you'll typically have is a government will launch a $400 million program, and right off the bat they say that's generated $400 million of economic activity. Well, excuse me, your $400 million just came from you. All you did is trade the money from one person to another. You didn't create anything. Secondly, you paid for your $400 million by a higher marginal personal income tax rate, and now you're inclined to work less. And you're going to work less efficiently because your tax rate is higher, so there's a cost from that. Your administrative cost is anywhere from 5 to 50% for a program. That never counts. That's a huge dead weight to carry. And you've distorted the natural allocation of resources. Normally, both would produce 1 unit of whatever you're producing, but now I'm subsidizing one party to produce 1.5 units and the other is going to produce less. That's an inefficient allocation. That cost. So the calculation works out that if you've got a $400 million program, you have to generate about $600 million worth of benefits just to break even on a benefit cost ratio. There is almost no government program that do that. The only way you could do that if you had a large and identifiable market failure. And in almost all cases of government intervention, there is not a market failure. Just think about the example. One of the elements in the Conservative Party was a permanent home renovation tax credit. Is there a market failure in the home renovation market? It beats me. What market failure is there? There's lots of providers of market renovation. There's even increasingly information on the quality of their services. There's no particular impediment on the price. If there's affordability issue for that, surely we can handle another faction. In fact, it's quite the opposite. If anything, we've got an overheated home renovation service. That would be the last kind of thing that you want to do. So we typically don't have those things, so you'd be very careful. So there's something really interesting that happened in the School of Policy Studies, and I don't quite understand the evolution of this. So when I was speaking to Duncan Sinclair's and David Walker's class in 2013, I wrote a flowchart up on the board in room 338, which I thought was original, but apparently, once again, I find that I've never had an original idea. Just somehow, I must have seen it from somebody else's. And it was a set of criteria and steps in a flowchart of what you needed to do to address public policy. And it started with identify the problem, which people don't normally do, then identify your objective, and then on an a priori basis, set out what criteria you would measure to see whether you're being successful. And if you're not being successful, then to redesign it. If you go into the School of Policy Studies in room 338, you will see on the blackboard there's a really neat, fancy chart, not as a flow chart, but inside the Queen's Q, which is basically that. And how that, as Duncan reminded me, I didn't actually erase it when we left, so I don't know. I don't know, just people, there is one flaw in the chart though, by the way. The last step in the chart says evaluate when it's been successful, and then it ends. I would kind of hope if it wasn't going well, you'd revise the program, but that actually is not on the chart. So maybe we could just handwrite that one in as a little bit of an afterthought. But so I don't say that lightly, and I had an interesting experience afterwards, because if you look after, well, the history of this is that the study was for the Council of the Federation. Unfortunately, we had to cede intellectual rights to it to the Council of the Federation. Don't hold your breath waiting for them to publish it, because it shows that they've got a huge problem that I suspect they'd rather not let people in on. But we verified with them that we had the intellectual right for all the background material, and we did the usual thing. When you have to write something short in a hurry, you end up writing something long in a hurry, and then you condense it. So we actually, when we put together our notes from this, we ended up with a 200-page report, and we did publish that. I'm sure no one's read it, but there's an executive summary, but itself is 25 pages, so probably no one's read that either. But when we did publish this, one of the first reactions was from Bill Watson, a professor of economics at McGill and a frequent writer in the National Post. And it was really neat, because his first line was, "This is an excellent report." His second one is immediately gone on my reading list. And his third line is, "I disagree with everything in it." I like the first two lines, but maybe not so. But his disagreement all revolved around one. He is steadfast in the view that governments can do no good. Everything by definition governments try to do, they ruin it. They end up distorting the market and making everything worse than they were before. That's kind of hard to drive to an extreme, because I suspect we wouldn't have any healthcare or education if we didn't have a public sector. It's so hard to imagine they screw up everything. Maybe they don't do it as well as they could. But that's basically what it came to. It says you're inviting a more proactive and active form of government. You're just inviting more of the policy settlers, as I said. So I wrote a comment back on his comment, and it basically said, you pose one question, as that question was, can governments do any good? I said maybe, not definitely yes, maybe. You're saying unambiguously no, but you didn't answer the second question. And the second question is the status quo acceptable? Because if you answer no to that, and how could you not answer no? We got modest growth, it's not inclusive, it's not sustainable, it is not satisfactory. How can you then say to continue the status quo, which is what he's saying implicitly? Keep on this market-based approach. it's done this for the last 30 years, let's accept what it's going to do to 30. That doesn't seem acceptable, and it's the same. Why would you expect a different result? It's the same, the conference board thing. Do the remaining 30% on top of the 70% you've already done, and that'll do the trick. Well, I don't think life works that way. I think you've got to do something else, but you've got to be scary about what you do with something else. And I think that comes back to what we do here, and particularly what we do in the School of Policy Studies. It takes a completely different approach from people involved in public policy. It takes a highly scientific, disciplined approach. It has to combine with a certain vision on the political side. One of the things that, of course, damns this approach is everybody has 3 to 5 year time horizons, and a lot of this stuff wouldn't be done in that time. So a lot of the things we put on was the emphasis on the inclusive growth. So the whole market-based policy is you set up these conditions and people will benefit from it. We know the record, 1 to 10% benefit from it, 50% kind of does okay, and the bottom 50% doesn't do well at all. So you need more intrusion, almost in a way, more intervention, more support from the people where it can be. When you talk about where's the labor force coming in Canada, well, it's coming from young Indigenous people, not graduating from high school, not getting jobs, not getting income. Kind of look at that. Underfunding reserves, that seems pretty stupid. The biggest underfunding relative to provincial schools is in Manitoba. The second is in Saskatchewan. That seems pretty interesting as a policy perspective. In those two provinces in 2020, 30% of the school-aged children will be Aboriginal. Where their economy goes in the future depends on what happens to those people, and they're not paying any attention to it whatsoever. Why would you continue with the status quo on that? I find it just interesting in the university environment. There is a presumption that the female labor force participation will not continue its upward trend because it's almost as high as the males. And I said, well, why would you assume that that's a barrier? Why couldn't it go above? We know the statistics, 61% of undergraduate students in universities are female, only 39% are males. They've decided they like the Neanderthal era, why not try it again? Not going to work out very well for them. 70% of the jobs are going to require some post-education, but there's difficulties in that. You know, where are the jobs? Yes, they're in health, which is predominantly female of late. That's good. Allegedly, but not quite to the degree most say, they're in the so-called STEM, science, technology, engineering, and mathematics. Where are the females? They're not there. You look at engineering, basically stuck at the same percentage of female participation for the last 40 years. Business has increased, still not typically most, it's around the 41%, it's gone up. And mathematics is very low. And what's even interesting beyond that, if you look at the economic outcomes of female graduates in science and math, they're absolutely terrible. The unemployment rates are almost higher from graduates in those disciplines than anything else. So something's wrong, but again, you can do things about this. And I think this whole skills matching is an area where governments can do something, and it's almost just providing the information and linking it up. Here are the competencies that are going to create jobs in the workplace. Here are the competencies that are going to be generated in a university. Let's see if they're going to be a better match. Let's see if we can match the information to guide people what disciplines they should take. Let's tell people that are coming in droves still to education faculties, I'm sorry, at the moment there's no teaching jobs in Canada. You shouldn't be coming into this. There's jobs in these other kind of fields, but we just don't have that kind of information. I know I'm getting off on a bit of tangent, but I find it kind of interesting because I'm on the advisory committee for a project that I think holds a lot of hope. And this is basically, we can take student identification numbers from colleges and universities, and we can track the students for the rest of their life through their income tax returns. Anonymously, of course. Don't worry, I'm not looking at your tax returns. Or at least I am, but I don't know whose they are. And it's quite fascinating because all we got so far is what happens to students the second year after they graduate. And as you would expect, the employment rates, humanities, liberal arts and stuff aren't very good, and the earnings are lower. But for the universities now, we got a long track record, and the University of Ottawa is one of them. It's an interesting one. There's almost a convergence. Like some of the ones that start out high, like law and medicine, keep that premium. But if you look at humanities versus social sciences, after you get about the 6th or 7th year, they start to convert in the earnings. That kind of gives you a different perspective. You would think you'd want somebody to know that you're not necessarily damned to a life of low income and break even on your life standard if you take certain fields. But we don't know that. We don't have value. So again, there's a role for a government to play in that. It doesn't need to be an expensive role. It needs to be a strategic role, but it needs to be through an information role, and it needs to be through a communication of that information. because we do, even the surveys we have, graduate student, that was released in the Statistics Canada Daily on April 28, 2014, and it says the data are available upon request. Thank you very much, Statistics Canada. Cost $1,000 to get the data. I figure there at most 30 people in Canada would know how to access and what to do with this data. And that's a survey we only get every 5 years. Statistics Canada did a brief write-up of it 9 months after the data became available. I would be very surprised if 50 people looked at it. The Learning Partnership did focus group cross-country tour last year, and they were asking 15-year-olds, their parents, on what basis they choose information college programs, what their job expectations were. They had no basis for the information other than what was given to them by the parents. And we know that parents are unbelievably biased towards exactly their own experience. They have no idea if they didn't go to university what the costs and benefits, and the same thing if they didn't do the trades, they have no idea. So we got a lot of problems. I think we do have some market failures. I think we do have a role for activist government, but we better be careful how we do it. And it's going to take a new and different breed of civil servant. It's a breed of civil servant that views themselves and operates more, if you would, a cliche, as a scientist than what we've seen before. It's not an intuitive, gutsy feeling thing. It's people who actually look at the evidence and define what the problem was, define where we should go, and figure out from that evidence how the policy should be designed, and then relentlessly look at the results against the expectations and the cost of those programs and modify them as they go. All we get right now is ex post and evaluation from the Auditor General. Those just make the situation worse, because the Auditor General is pre-programmed to accept absolutely zero risk. And that will always lead to inefficiencies in a program. So if you allow your program to go off the rails to the point that you get straightened out with the auditor generation, you're beyond the point of any control. And you look at programs like welfare, if the Auditor General finds one case of fraud, they'll add $100 million of the expenses to prevent that one case of fraud, because they can't accept the situation that says you're actually better off and more efficient to run a system that has 1 or 2% fraud rather than saddling the entire economy. That just won't happen. But somebody else will have to look at that and say that's an acceptable way, and that is giving us a satisfactory result. So it's kind of ironic as I look around the room, my pitches to the 20 and 30-year-olds are going to be in the next generation. I don't see any of them here, but anyhow, we got Peter Harder, my counterpart from the 1990s in the federal government, leading the transition. So maybe the rest of you will go back into the government and lead the charge of that as well. I will end there. I will be happy to take any questions or comments you might have. All right.